Speak Core Read, AI infrastructure spending and backlog conversion are still the dominant setup across US and international markets. NVIDIA anchors the board. Microsoft announces $5.5 billion spent to power Singapore's AI future is the counterpoint. What changed? NVIDIA AI ecosystem expands as Marvell joins forces through NVLink fusion. The next disclosure only matters if it changes estimates. Bottom line, lead with the estimate-moving disclosure, not the market echo. The point of this format is speed with structure. We do not chase noise. Prosody rate equals plus 5%. We start with the top signal, tested against macro conditions, and only then build a tradable conclusion / prosody. By the end of this video you should be able to explain the setup in one sentence, define what would confirm the thesis, and identify what would invalidate it before capital is at risk. For Global Company Catalyst Digest, the goal is not to summarize every headline. The goal is to isolate what changed, why participants care, and how long the change can stay relevant / speak. Speak Catalyst Board, confirmation only. NVIDIA said Marvell will join the NVIDIA AI Factory and AI-RAN ecosystem through NVLink fusion and disclosed a $2 billion investment in Marvell. Estimate moving, Microsoft said it is on track to spend $5.5 billion in Singapore from 2025 through 2029 on cloud and AI infrastructure and ongoing operations. Watch only, the next item is only worth tracking until another primary source confirms it. Broadcom stays a watch item until the supply chain shows more follow-through. The point is simple, separate the disclosure that changes estimates from the one that only confirms the setup. Prosody rate equals plus 5% sector ETF read. This is a defensive tape. Utilities, staples, healthcare, and real estate are leading while growth cools / prosody readout, rank by what can move estimates, not by what is merely popular / speak. Speak cross-story synthesis, Oracle shows backlog conversion, NVIDIA or Marvell confirms the ecosystem, Microsoft shows the spend schedule, and Broadcom confirms the supply chain. Rule, the chain matters more than any individual headline. Prosody rate equals plus 5%. The ETF tape says this is a defensive tape. Utilities, staples, healthcare, and real estate are leading while growth cools / prosody rule. The value is in the chain, not the individual headline. In this chapter we focus on signal quality. Ask 3 questions: is the move broad, is it persistent, and is volume confirming it? Prosody rate equals plus 5%. A clean yes to all 3 is stronger than any single headline / prosody when signal quality is mixed. The right response is not prediction, it is scenario planning. Prepare both upside and downside paths so execution is fast when confirmation appears. For Global Company Catalyst Digest, confirmation usually requires 2 layers, narrative adoption and tape confirmation. Prosody rate equals plus 5%. Without both, upside follow-through tends to be short-lived. / prosody put differently, ask 3 questions: is the move broad, is it persistent, and is volume confirming it / speak. Speak Source Health. Source Health is clean enough to use the macro tape as confirmation, not the thesis. Macro read, ICWI plus 0.31% versus QQQ plus 0.68%. Rule, use the macro tape only when the feed is healthy enough to trust. Macro pressure usually transmits through discount rates and energy costs first. With 10-year yields near 4.29 and oil around $97, the burden of proof for risk assets gets higher. The goal is not to forecast every print. The goal is to classify regime, easing, neutral, or tightening. Once regime is identified, position sizing and holding period become much clearer. When the tape gets this sensitive, the real question is whether the next data point changes the regime or just adds noise to the day. If liquidity keeps tightening, higher duration assets usually need more proof before they can keep paying up. Put another way, macro pressure usually transmits through discount rates and energy costs first. Put another way, the goal is not to forecast every print. Put another way, when the tape gets this sensitive, the real question is whether the next data point changes the regime or just adds noise to the day / speak. Speak what confirms next. Watch the next official filing or investor update and whether price action confirms the read-through. Evidence question: did the disclosure move estimate paths, or did it only confirm the existing setup? Check: if the next disclosure does not move estimates, treat it as confirmation only. Liquidity checks keep us honest. Prosody rate equals plus 5% if yields are firm, dollar conditions are tight near 98.68, and volatility is not giving a clean read, upside moves need stronger confirmation before they are trusted. Prosody market implied positioning can help here. Current signal reads, the S&P 500 moved 0.62% and the Nasdaq Composite moved 0.83% on the day. For investors, use that as context, not certainty, and wait for price action to agree before committing size. In chart terms, liquidity checks keep us honest. In chart terms, market implied positioning can help here. Prosody rate equals plus 5%. Put differently, if yields are firm, dollar conditions are tight near 98.68, and volatility is not giving a clean read, upside moves need stronger confirmation before they are trusted. Prosody put differently, current signal reads, the S&P 500 moved 0.62% and the Nasdaq Composite moved 0.83% on the day. Speak prosody rate equals plus 5% upside path. If the next disclosure confirms spend, backlog, and customer demand, the trade broadens across semis, cloud, and software. Prosody rate equals plus 5% upside. Broadening breadth is the real upside confirmation. Prosody the bull case should be specific and testable. Identify the exact conditions that must hold for continuation, improving breadth, comma rates, and follow through after pullbacks. If those boxes are checked, execution becomes mechanical. Buy strength that holds, reduce risk when momentum fades, and avoid adding size into extended moves without confirmation. Prosody rate equals plus 5%. The upside case only sticks if the market can keep widening beyond 1 leader and into the rest of the stack. Prosody rate equals plus 5% in the upside case. The bull case should be specific and testable. Prosody in the upside case, if those boxes are checked, execution becomes mechanical. Buy strength that holds, reduce risk when momentum fades, and avoid adding size into extended moves without confirmation. Prosody rate equals plus 5% in the upside case. The upside case only sticks if the market can keep widening beyond 1 leader and into the rest of the stack. Prosody speak. Speak can validate thesis if spend slips, backlog softens, or the supply chain commentary is only ceremonial. The move becomes a one-name reaction. Failure mode. A ceremonial update is not the same thing as a durable estimate path. The bear case is not fear, it is risk control. Define trigger levels where the thesis is wrong, and respect them quickly before drawdown compounds. Prosody rate equals -3% when downside pressure builds, leaders often break last. Prosody watch breadth deterioration and failed rebounds. Those are usually earlier warnings than headline sentiment. A failed bounce tells you more than a bad headline, because it shows the bid is getting tired. On the downside, the bear case is not fear, it is risk control. Prosody rate equals -3% on the downside. When downside pressure builds, leaders often break last. Prosody rate equals -3% on the downside. A failed bounce tells you more than a bad headline, because it shows the bid is getting tired. Prosody put differently, define trigger levels where the thesis is wrong, and respect them quickly before drawdown compounds. Speak triage labels are the point of the product. Estimate moving resets the path, confirmation only validates the chain, and watch only needs another primary source before it graduates. Guardrail, triage first, then size the idea. Risk management is the edge most creators skip. Use smaller size when volatility is high, and scale only after the market confirms your thesis across multiple sessions. Keep one invalidation level, one reduce risk level, and one add risk level. This removes emotional decisions and makes your process repeatable in both winning and losing streaks. If the tape is volatile, the first move is to slow the decision speed, not chase every swing. Speak watchlist, cloud capex and backlog conversion. Next check, which disclosure changed your estimate path, and which one only confirmed the setup. For the next session, reuse this checklist before the open and after the close. Consistency in process usually matters more than one perfect forecast. If you want deeper follow-ups, request the exact market and timeframe in comments. We can run this same framework on indexes, sectors, single names, and cross-asset setups. The next check is whether the setup is still intact after the market has had time to digest it. Speak educational content only. Nothing here is financial advice. Use primary sources, manage risk, and make your own decisions. Educational analysis can reduce decision noise, but it cannot remove risk. Treat every view as a hypothesis to test with your own data and constraints. Use the video to sharpen judgment, not to outsource it. Your process should stay in charge, even when the story sounds compelling/speak.